So in today's video, I'm outlining what we just saw from the Forex market and where it could be going next week for the DXY, the EURUSD, the Pound USD, the Australian dollar versus the USD, and also gold. Now, if you guys do want my help with your trading, click on the link at the top of this video. That's going to give you 85% off lifetime access to our VIP group and also course that I just launched this past week. So the community has been there for years. You guys know it. The course I just launched this past week. So you're going to get lifetime access to all of that. And the community, by the way, also includes daily videos from me, exclusive charts and setups, seeing my trades in real time, plus real-time chat with myself and 1,800 other members on Forex, crypto, commodities, and stocks. So check out the link in the description of this video if you're on YouTube. If you're on the website, click on that link that says Trading Group. Okay, so let's take a look here at the DXY first and foremost. And when we look at the daily chart, you can see that this week has been mostly consolidation. Okay, so almost the past 2 weeks now, basically just consolidation here for the dollar index. And that's no surprise because when you look at this chart, all of this consolidation that we saw last year, right? All of this up here, you know that when a market gets to an area like this, we are likely to see some type of consolidation, okay, if not a pullback. And that's what we're seeing here so far. So this was no surprise. Furthermore, this channel that we've talked about here, this ascending channel, you can see that we've got these lows back here and we've got these highs. So as soon as we saw the DXY come into this area, we knew that this was going to be resistance and we could get a pullback from the dollar index. And that's what we've seen so far. Now, this channel right here, if you look at this on the 4-hour chart, this is what kept me from trying to short the dollar this week for a pullback toward 105, because this entire time, even yesterday, the market never broke below the bottom of this channel. Okay. So this was always intact as support. We've got resistance up here in this area. Now, the one reason why I am a little bit skeptical about what we're seeing today is, first of all, it's a Friday. Secondly, we have the market not really testing the top of this channel, at least not yet. So if we see the DXY rotate lower today and close below areas like this through here, and then retest this level again on Monday, what you have is a market that continually retests support and has not retested resistance since back here on this candle. And that could be problematic, right? Because a lot of times when you see a market that is constantly pressuring a level like this, it does indicate a potential break lower. But again, this to me right now is really no man's land. This is not where I want to trade the dollar. I want to trade breakouts and ideally failed breakouts, which is what the course is all about. So for the DXY, what this is going to come down to is that if next week we were to get a break below the bottom of this channel, all right, so a break below this level, the 105 level is going to be significant. This is going to be really a must hold for bulls. Of course, we could see that fail and the market come down here and test the bottom of this, long running ascending channel down here, right? That could also happen. But 105 support would be kind of a must hold for bulls. Now, if we see the market take out channel support up here, okay, so close above this level up here, then that would expose that November 1st gap, that open gap at 106.88. Okay, so we've got these highs up here around 107. We've also got that open gap from November 1st. So this up here is going to be resistance. We've got support down here at 105. So really with the DXY trading right in the middle of this range, you do have to be careful. I really don't see a ton of opportunities as it stands now. However, what I'm going to show you next on the EURUSD and the pound could set something up for next week. All right, so next up we have the EURUSD. And as you can see here, the market did test our 1.073 level. So this is what we've talked about now for really weeks. And what's interesting about this is that if you look here on the 3-day chart, and I mentioned this to VIP members yesterday, right, is this area back here at 1.073. If we look at this here, you can see that we've got this high. And in fact, I'm going to remove this here for a second, because if you'll notice on the 3-day chart, we've got this high back here, we've got this low, and those are exact, right? Then you've got this low here, once again exact, this closing price, which was very close to it. You've then got this low over here, which was exact. Then the 3-day candle just closed yesterday, and technically the euro actually closed above this by a few pips. Now, that's not enough to convince me that this down here is a failed breakout and that the market's moving higher. It's not enough. 3 pips is not enough. But it is interesting, though, that the market closed just above that mark, and we're seeing, a pretty significant recovery so far today, following an aggressive sell-off. Now, obviously, the next 3-day candle doesn't close for a few more days, so next week. But if next week, sometime we were to see it close back above 1.073 into that next 3-day candle, then that could start to set up for a failed breakout and a move higher. So again, as I've said before, that's what the new course that I just launched is all about. It's about trading moves like this, and you're trading away from moves like this. So as you can see back here, we got this level right here, resistance, the close above, close back below, retest as new resistance, sell off. So the new course teaches you how to catch stuff like this, and these happen more often than you think. Because if you'll notice here for the EURUSD, if I just map this out, you can see that we have this range, right? So this has just been one big range here for the euro. And what you'll notice is that this back here was a failed breakout. This down here could be a failed breakout, but we need to see more from the EURUSD first. I'm not confident enough in this to short the market. I'm also not confident to buy it. So I need to see a little bit more here from the euro. And you could look at this on the daily chart and say, well, okay, but today is selling off from 1.073 resistance. Isn't that good enough for a short? And for me, it's not, because again, you are seeing the market recover quite a bit here. We did have the potential for a bearish engulfing day, but right now the market is recovering off of that low quite significantly. Now, I don't know if it's going to close up here today. That would be quite the move into a Friday close. But the point here is that really there's nothing here for me to short, and there's nothing here for me to long. But I do think that if next week we were to see the euro recover back up here in this area on the daily time frame, especially into the current 3-day candle, okay, up here in this area, then that could be good for a long. However, you do have to be careful with the DXY above 105. Okay, so pretty inconclusive right now for the EURUSD. I think that the pound is a little bit ahead of the curve here, and I'll show you what I mean next. But really for the EURUSD, what this is going to come down to is this area up here next week. Okay, so can the market recover back above 1.073 next week? Or does it continue to serve as resistance? Support for this market, obviously 1.0615, and above this level, if we do see a reclaim above 1.073, then we're looking at areas like 1.08. So why is the pound ahead of the curve, as I just said? What do I mean by that? And the key here for the pound is that, first of all, we saw the break below this level right here around 1.2375. So let me move out here to make sure you can see it. We do have this pivot, or we did have this pivot down here that I talked about. We got the close below and the close right back above. So that was the first bullish sign there for the pound. Now, the second bullish sign, and I mentioned this a couple of days ago, this candle close right here on Tuesday. This candle close, closing back within this consolidation, that was bullish. Okay, anytime you see this right here, consolidation, break below, and then it close back within that consolidation, that is a bullish pattern. And so far, we've seen the market continue to move higher. Now, the reason I say this is ahead of the curve, or at least ahead of the euro, is that we do have two key levels here for the pound. We've got 1.25 and we've got 1.2535. Now, 1.25 was reclaimed on Thursday. So you can see that this close on Thursday closed above 1.25, right? Very easy to see because this Monday candle right here retested that level exactly, and that's where we got the sell-off. So Thursday reclaimed it. And today you can see where the market is trying to close once again back above 1.25. However, like the euro, like I mentioned, I can't long this and I can't short it right now because we have the market, yes, coming into this area at 1.2535 that I've talked about for a potential short. However, Thursday closed above 1.25, right? So I don't want to short the pound up here when I saw Thursday close above 1.25. Okay, so I can't short this. I can't justify shorting it. I also can't justify longing it though because it's still below this pivot right here at 1.2535. Okay, so you kind of see the dilemma here where the market right now is just kind of trapped between these two levels. So I think what this is going to come down to is, can we see the pound close above 1.2535 next week? Much like the euro, if we do get a close up here next week and the market can reclaim this, then that would be bullish toward levels like 1.27, potentially higher. Okay, now if we were to see the market next week close below this area down here convincingly, plus take out all of these highs back here, if we were to see something like that, which by the way, today's low is telling you where to watch, because it's telling you that this level, this area down here, is the one to watch for the pound. Notice we've got this closing price back here. Okay, resistance through here, close above, support, and support once again today. Okay, so it's going to come down to, do we get the reclaim up here next week? Or do we get the close back down here in this area? Once we see one of those two things, I think we'll have some momentum here to play. But right now, like I said, with the pound just going sideways here between these two areas, I can't justify trading it. All right, so next up, let's take a look here at the Australian dollar, which I think is really interesting at the moment because we do have this range that has developed. And within that range, we have a channel that broke down recently, and the market could be ready to reclaim it. Okay, so we've got these highs up here. This one came close, didn't quite test it. We've got the range lows down here, right? So just a sideways market for the most part. But what's interesting here is that we do have the market breaking below this channel. Okay, so there's no question that this over here was and still is an ascending channel, right? We've got these lows through here. Even look here before the breakdown, the lows right here. Now, if you're not convinced by this, take a look at today's intraday price action. Okay, if I go to a 5-minute chart, which I don't trade a 5-minute chart, I'm just showing you this for example purposes. But notice this low right down here. That's the 5-minute, and that's that channel. Okay, 65.17. I told VIP members actually when the market was up here, I said keep an eye on 65.17 because that's going to be the line in the sand with regard to today's close. And sure enough, that's exactly where the market bounced. Okay, so this right here is telling you that this is significant on the daily. Okay, so if we see the Australian dollar close up here today, then this could be a potential reclaim. This is also hinting at a potential move lower for the US dollar, right? Because it's going to be really difficult for the Australian dollar to move significantly higher next week if we get a reclaim here with a strong DXY. Okay, so this could be a clue for what's to come next week for the dollar, but we still, of course, do have some time left in today's session. Okay, so if we get a convincing close up here above this level, this could be a reclaim going into next week. However, you've got to be careful because Thursday's candle, notice how we've had no retrace. So if we do get a reclaim here, I would expect a flush to take out the lows here today before we get some type of bounce. So keep in mind that we do have an imbalance down here in this area right around 0.65. But if this does reclaim, again, I think that opens up these higher levels. Okay, so you've got to be really careful trying to short this market. I don't think this is the time you want to be shorting. If anything, if we get a reclaim up here, it might be the time to look for a bid next week somewhere around 0.65. Okay, but we'll see how it ends the day here. But so far, it was a pretty significant bounce from that 6517 level. All right, and last up, guys, we have gold XAUUSD, which I talked about just yesterday. And if you saw that video, what we were looking for was this fake out up here to potentially hold. Okay, so you can see that we have this channel here. We've got two lows where the market tested this as new support. We then saw the close below, and since that time, this area has been resistance. So if you saw yesterday's video, what I mentioned in there was that today would likely sweep Thursday's high. The reason I said that is because of this candle. Okay, this candle right here, looking relatively bullish. I did think that on Friday, we were likely to get a sweep up here of this high, potentially a retest of this low back here, which it came, very, very close to that level. Okay, so for now, it still stands that 2350 is going to be resistance for gold. You can see that on the intraday charts, it does get really choppy around that level, but regardless, this area up here at 2350 is going to be the one to watch for next week. Now, obviously, if we saw gold close today above that, right, the day in the week, then that could be bullish for gold back here toward these highs up here. However, the market would have to get convincingly above 2350 for that to happen. So as long as it's below this is going to be resistance. We do still have that potential for a further pullback. But keep in mind too that 2300, this low down here, this is going to be support for gold. Okay, we've seen this act as support. So this is going to have to give out on a daily closing basis to flip to resistance and expose levels like 2265, potentially that area around 2200. Okay, so still a little bit unclear as of now. However, the same thing as I said yesterday, that hasn't changed where 2350 is going to be resistance. The market would have to get convincingly above that on the daily chart to open up these highs. As long as that's the case, we do have that potential for a further pullback next week. Subscribe to the channel and click the bell icon for notifications. Don't forget to claim your 85% off lifetime access to VIP for the full course I just launched, daily videos, my trades in real time, plus real-time market discussions. Have a great weekend, and I will talk to you again on Monday.